Hello traders, and welcome to another video review. Today is Wednesday, February 21st, 2024. Let's take a look at the Forex economic calendar today. As you can see, we got data from Japan that were released overnight in form of the exports, trade balance and adjusted trade balance. All of them beat the expectations significantly, so we will take a look at the Japanese yen later on today. During the London session, we got the European Central Bank non-monetary policy meeting at 9 o'clock. Then we have the German Buba President Nagel to give a speech. Then we have another ECB Supervisory Board member Fernandez Bolo to give a speech as well 25 minutes later, and 5 minutes later we got German 10-year bond auction. So that's about the Eurozone and the Germany. CBI industry orders from the UK are scheduled for release at noon. Then we got the speech from FOMC member Bostic at 2 o'clock. New housing price index from Canada are scheduled for release at 2:30. Supervisory board member Totay, he will give a speech 4:10, and then only the data from the US are scheduled for release. 20-year bond auction at 7 o'clock. FOMC member Bowman speech at 7 o'clock. FOMC meeting minutes, the key event of today, at 8 o'clock, and then API weekly crude oil stock at 10:30. So as you can see, we are waiting all day for the FOMC meeting minutes release, but in the meantime, let's take a look at the technical part of the video, and we are going to start with euro dollar, and then we will switch to Japanese yen. The most popular trading pair in the world, euro dollar 4-hour chart, looks very interesting. We hit the level for the wave C at 1.0821. So as you can see, this level has been apparently very nicely hit. Nevertheless, the local high was made at 1.0840, 20 pips higher. So it looks like the length of the wave C is 127% of the length of the wave A. Very nice setup here, and it looks like we got some sort of the pin bar here that was basically made on a 4-hour chart, and then the market went lower after the pin bar was made here. So let me just maybe see this in the other way around. So instead of the supply zone, we have now demand zone. So we got this demand zone here, and of course right now this arrow is no longer necessary, and the demand zone might be filled in green right now because it should work as the demand zone, which means that this market will eventually be trying to bounce from this zone as the demand is high right now. So we are switching the sides from supply to the demand. So we got the first demand zone. Let me just extend this channel. All right, I will just extend this channel, and we got this demand zone in progress right now. Okay, so this is done. Let me just make it smaller because it doesn't actually fit here. There you go. So we got this demand zone. We got the very nice test of this demand zone. As you can see here, we tested the 1.0885. We are trying to bounce, and now of course the market is poised to hit the top of the wave free after this reversal was done. If we are eventually break above this level, then there is another zone here, another supply zone. Of course, this supply zone, as you can see, is located between 1.0888 1.0898. So this is like a let's say 10 pips supply zone. And we should see some sort of the reaction on this zone whatsoever, only if this level here 1.0840 is violated. The momentum is strong, momentum is positive, so we should see some bullish developments here unless the demand zone is violated and the market is out of the channel, of course, or the market is out of the is below the 50 or 100 periods moving average. For now, it looks like the wave C might even get extended towards 161% of the Fibonacci extension level. Let me just check this out, how much it is then. So if we just consider this level as the low, let's say this level here as the wave A, and the wave B would be here. 161% is roughly around 1.0770. So let me just mark it here on the chart for you guys. 108.70, exactly 72. So this is the 161% of the extension. So looks nice for the bulls, just below the supply zone to have this kind of a target level. Let me see if everything is okay with the chart. Yes, everything is okay with the chart. We just do the quick screenshot, and this is it. US dollar to Japanese yen next. Now the situation here on the US dollar to Japanese yen is slightly different, because we are now moving in horizontal way. So after the level of 150.89 was hit, we got minus 0.89 correction or pullback. We broke below there short-term trend line, we tested it, and now we are trading below 50 periods moving average, but still above 100 periods moving average, above the technical level at 149.75 whatsoever. Now the outlook remains bullish. However, we are spending too much time here. If we just zoom out, we can see that the last kind of a consolidation that was made in the beginning of the February, end of the January. Let me just take my my date range tool. You can see it clearly that, let's say, from this high to this low, it was exactly 56 bars. So almost 2 weeks, right? If we do it again with the current let's say movement to the right, yeah, horizontal trend, we got already half of this, so 7 days and 16 hours. So if we do the Fibonacci time measurements, we should say that this is the 50% of the last big correction. So it's either now, or we have to wait for another week for the euro, for the US dollar to Japanese yen to move higher. But this is the time analysis, right? What about the price? What about the price? Well, the price is being locked in the horizontal trend, as we said. Nothing changed here. We cannot go below the level of 147.55, because then we will extend this movement to the downside, and because of the overbalance of price and time in that situation, we can no longer treat this movement in that scenario as a part of the upswing. So we have to treat it as different cycle, and this cycle would be to the downside most likely, with the next immediate target at 148.94. So please keep an eye on both of this level and on the time period that it takes to get to complete this horizontal trend. Okay, so we are waiting for the breakout both in time and price manner. So that's the situation with the US dollar to Japanese yen. British pound, American dollar, what do we have here? Doesn't actually, we are not doing much here. We got this very nice, let's say, very nice movement to the upside. We broke above the 100 periods moving average. Let me just grab this one here, and let's just mark very important candlestick. We got something like a shooting star, but it also looks like a pin bar. So maybe, okay, let me just play it a shooting star. Let me just label it shooting star. Okay, fine. This shooting star was made, of course, below this this trend line here. So the trend line is still of course valid. The high was made at the level of 1.2667. Then we tested the 100 periods moving average, and now we are bouncing higher with the positive momentum. Nevertheless, all of this movement here looks very, very corrective in nature, and the market keeps waiting for another breakdown, breakout to the downside. If we move this line here, look, you can take a look. The blue lines are the trend lines, yeah? So we bounce, we break. Now let me just repeat this pattern because we might see this much more often, yeah? So this is basically kind of even a trading setup, yeah? So let's say we got something like this, yeah? We bounce, we bounce, we bounce, we bounce, and then we go as high as we can unless we break to the downside. Of course, some of you might even move this this line, for example, here as well. It's not a problem. I'm just trying to show you guys the general rule. So we are still below the orange trend line. We are generally making the some sort of the reversal patterns here. This looks corrective, this looks corrective, so the market is not eventually positioned in any direction, and we should see some kind of a movement to the downside quite soon, because the bulls doesn't actually look like they want to move higher anytime soon. So that's the situation for the British pound as well. Let's just take a look at the Bitcoin. At the end of our analysis, we have another reversal pattern here on the Bitcoin. We got something which is called bearish divergence, and we got something which is called pin bars, and we got something which is called bearish engulfing, and then we got bearish engulfing. So this pattern here, which is a slight of a very nice reversal pattern, might get much more attention soon. So let's label it. We got bearish reversal. We got the new high at 53,023. Nevertheless, it doesn't actually matter that much because this for our chart reversal pattern is quite big. So that's bearish engulfing, and this bearish engulfing pattern might cause way bigger let's say correction or a pullback, right? So momentum is already moving lower. Bearish divergence is extending. As you can see, this bearish divergence is extending even lower. So right now we should prepare for another movement to the downside very soon, as the market is not actually interested in higher prices anymore. That's it. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.